All right, so with Bitcoin hitting a new high last week, I wanted to make a video, go into a few different topics here. First things first, if you get value out of the video, please like, subscribe, comment. I really appreciate all that. First things first here, Bitcoin archive. Bitcoin is up 240% since Jim Cramer told people to sell back in March of 2023. So these are posts I like bringing up because the amount of these people that make these kind of predictions and turn out to be woefully wrong, that just never acknowledge it, like especially people that are either literal professionals or quasi professionals, like that's just really, really scummy to me that you have these people that are wildly wrong, and yet they just refuse to acknowledge it. And then, or another thing sometimes they'll do, it's like, oh, well, I don't really understand Bitcoin and blah, 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 blah. They'll make some garbage excuse to not have to acknowledge they're wrong. Like, I don't care if you don't understand it. If you're wrong, you're wrong. Just acknowledge it. Like, just acknowledge it. When it comes to gold, I've never said I don't like gold. I've always said I just think Bitcoin is better. And I think that's, I mean, even though gold's at an all-time high, I still don't think it's better than Bitcoin. I mean, even go back a year. I don't know off the top of my head, but something tells me I don't know. I don't know off the top of my head, but I don't think gold is up that much. It might not even be up compared to Bitcoin. So that's the first thing I wanted to bring up, is that for all these people too, like, this is my big question. It's like, what's it going to take for you to acknowledge you're wrong? Like, is it 100,000? Is it 200? Is it 500? Is it a million? Like, what is it going to take for you to acknowledge you're wrong? And something that really gets me on these guys is that they say, oh, I don't understand it. And it's like, there's no way. Like, there's no way that you can be a financial advisor or an economist or even someone that likes stocks and investing, even if you're not a professional. Like, there's no way that you can be that knowledgeable and not understand the use case for Bitcoin. Like, there's no way, because understanding the use case for Bitcoin is easier than being able to value a stock, because the use case for Bitcoin is, number one, it's censorship resistant. Number two, it doesn't have any counterparty risk. This is something that just boggles my mind, that these people pretend like it doesn't. Like, if the government wants, they can seize your bank account. They can seize your stocks. They've seized people's gold in the past. They can't do that with Bitcoin. Yeah, Bitcoin doesn't have earnings or cash flow, but it's got the fact that the government can't take it from you. It's got the fact that it's not reliant on the banks. Like, one of the big reasons for the financial crisis was we are so reliant on a centralized group of people that face no consequences for being wrong. That doesn't exist with Bitcoin. Bitcoin does not discriminate at all. It cannot be debased. It cannot be devalued. And people say, "Oh, well, gold is better because I can feel it and see it." Well, it's like, okay, well, yeah, you can, but how do you know that it's real gold? You can't, right? You can't. If you're transacting on chain with Bitcoin, you know that it's real Bitcoin. So this is this just idiotic boomer argument. Oh, well, I can physically hold my gold. And it's like, yeah, I can see that being a benefit in some ways. I definitely can see it. But just because you can hold it in your hands doesn't mean that you know that it's real for sure. If some random guy comes, to buy something from you with gold, how do you know that it's real? Now, again, obviously there's ways to figure it out, but not in a matter of seconds like you can with Bitcoin. So my whole point here is, number one, until these guys start admitting they're wrong about stuff, I don't know why you take them seriously. And number two, they're wrong because they never steel man Bitcoin. And this garbage, oh, well, I don't understand it. It's like, no, you're lazy, or you just don't want to admit you're wrong. Like, come on. There's, like I mentioned, there's no way you can be a financial advisor or an economist and not understand the use case for Bitcoin. I can understand if you're not as bullish as a lot of people are. I can understand that. But this garbage about, oh my God, you don't understand it. It's like that is such a cop-out, it's not even funny. Next thing I wanted to bring up here 12,000 Bitcoin a day keeps the doctor away. At this rate, they'll pass Satoshi in less than 2 weeks, although they can't keep up with this Joey Chestnut level pace, can they? So this is in regards to the amount of Bitcoin being bought by the ETFs. Jim Bianco says, to me, this massive concentration of Bitcoin in TradFi hands is not something to be celebrated. It's a major red flag. And my first initial response to this is, number one, I don't necessarily completely support it. Like, I don't. But something I just can't help but notice here is, I don't know about Jim Bianco personally, but something I hear all the time from the gold bugs is, oh, well, all these central banks are buying up the Bitcoin. Buying up the gold. So which one is it? Like, is the institutions and the governments buying gold? If it's a good thing for gold, why would it not be a good thing for Bitcoin? And again, like the contradictions from these people, it's like, you guys are professionals. I'm just some guy on the internet with very little formal training. A little bit of economics background, but very little compared to these people. So if I can come up with like just obviously contradict you, like, what are you doing? Like, seriously, like how do you look yourself in the mirror and have any respect for yourself? Like, it just boggles my mind that some of these guys can still pretend like they're quote unquote professionals. And I mean, I've said this about a lot of these guys, is that they're great when it comes to stocks, bonds, and that kind of stuff. But the minute you bring up Bitcoin, it's like they lose their minds. Like, they just completely lose their minds. Like they I don't know if it's that they think that, oh my, I understand stocks, therefore I just should understand Bitcoin, but I'm not going to put any research into it. Like, I don't know what it is exactly, but like, these guys are just absolutely insane. And I mean, like I mentioned off the start, I don't necessarily think that it's great that BlackRock is buying up a bunch of Bitcoin. I really don't. But at the end of the day, if you want a free market, you get a free market. That's how it works. The reason why they're buying up so much Bitcoin is that there's demand for it. Like, you don't get to pick and choose. Like, you really don't. Even privacy coins, like, what's to stop BlackRock from buying them? So this idea that it's terrible, like, in some ways, yeah, it is. But at the end of the day, a free market's a free market. You don't get to pick and choose. So really kind of a ignorant, poorly thought out point here. And the last thing I wanted to leave it on was this thread here. Like you, I see regular posts about the spot Bitcoin inflow records running out of superlatives. They are correct. We've never seen anything like it. Why isn't it going up since Bitcoin on March 13th? Spot Bitcoin ETF inflows, the halving, Trump endorsement, tech mania, Fed cut. The price should have hit 100K months ago. Instead, it's down. At the same time, money has been pouring into gold ETFs, $6 billion since March 13th, and gold's price is higher, up 25%. Why is gold soaring when Bitcoin cannot go up despite almost never-ending stream of bullish news? To me, the answer is simple. Gold inflows are almost all new money. Bitcoin flows are mostly on-chain or centralized exchange money, not new money. Coinbase CFO this week, retail is leaving them. We would argue for the ETFs, hence the big inflows. Revenue is down 18% from the second quarter as crypto prices went sideways after Bitcoin hit its all-time high in March. Again, just because Coinbase's revenue is down, like, what is that proving? Because the whole philosophy behind Bitcoin is you buy and you hold. You don't trade. The philosophy behind crypto is, yeah, it's the casino mentality, absolutely. But the mentality behind Bitcoin is not the same. And again, like, I don't mean to be disrespectful, but I really don't think he knows what he's talking about, like, at all. And also, gold inflows, yeah, that definitely is new money. But when it comes to Bitcoin, I think, I mean, something that's different as well is you have had the Mt. Gox selling. You've had some of these big governments selling off a bunch. I think even FTX released some that I'm sure a lot of it was sold. So we don't have a comparable example when it comes to gold. Like we at least I don't think so. So that's the main driver of it. I think to some degree, like to a small degree, that's right. And also, I think that there's a lot of people that it's like, once it gets to an all-time high, I'm going to sell. There definitely is some people in the Bitcoin space that have the casino mentality, but when you look at the on-chain analysis, like 70-80% of people are buy and hold long-term. There's some people that are selling, yeah, but I don't think that it's all just the same money. The next one, see the size of the trade. The average gold ETF trade is 72,000. For Bitcoin, it's 16. So this is a good point here. This definitely is a good point. That's part of the reason why is that the average trade is a lot less. So that definitely is a realistic point, and I think that's something that definitely needs to be acknowledged and brought up. And the last one here, I've argued this before. This is a problem for crypto. The ETFs are not attracting new money. They are not the gateway to get boomers on chain. I think that this is a stupid argument, because what do you mean the ETFs are not attracting new money? Like, that's the whole point of the ETFs. Like, that's literally the whole point of the ETFs. Like, when I look on again, this is anecdotal, but when I look on Twitter, Reddit, you name it, even watching some of the bigger Bitcoiner, YouTube channels, I've never seen one person that was like, yeah, I was dollar cost averaging Bitcoin, but then the ETFs came out and I stopped dollar cost averaging Bitcoin and I started buying the ETFs. Like, I've never heard anyone say that. Like, never. And when you look up, when you listen to the more hardcore people, I haven't heard any of them, like not one of them, say, yeah, I'm just dying to buy the ETFs. Like, the ETFs are the people that are too scared typically to get their feet wet, or they want some exposure in their TFSAs or Roth IRAs. Instead, they're sucking money back into TradFi accounts. It comes from Coinbase, Kraken, Gemini, hot wallets, and cold storage. No one cares about owning their own keys. And if these again, like he just got done saying, oh, well, Coinbase revenue is way down. Well, and if that was true, and nobody cared about holding their own keys, well, people would be pumping money into your Coinbases and of the world, because when you look at the big ETFs, most of them, Coinbase is their custodian. Obviously, Coinbase is charging them a fee to hold that Bitcoin. So if that's the case, well, why is their revenue down? Like, that, those two just don't square up to me. And if these ETFs keep sucking money back into TradFi accounts, they will continue to hurt, maybe damage on-chain investments, as this gives government regulators and TradFi chieftains more power over the space. So the more glowing posts I see about massive inflows without new highs, the more I worry this is not good for crypto's future. Where are we now? Worried boomers are pouring into gold, and its number has to go up. Bitcoin is a zero-sum game of existing money that cannot make number go up. And again, like, why is it a zero-sum game? A zero-sum game assumes that only a small number of people can benefit. But that doesn't make any sense, because there is no way, like there is no way, like, it's not mathematically possible for your BlackRocks of the world to buy up any more than 10, 15, maybe 20% of Bitcoin. Like, it's not possible. But they could do that with gold. Absolutely, they could do that with gold. So what do you mean it's a zero-sum game? And this is an argument that you would hear from, like, your socialist types, that it's like, oh, well, Bitcoin, you shouldn't buy it because it's not fair that the people who bought off the star just got rich. And it's like, yeah, that's true, but it's also true that the whole idea behind it is designed to preserve your purchasing power. And just because other people got in before you doesn't mean that you're not going to get the same results if you wait long enough. I don't think that getting 10,000% returns or whatever is necessarily realistic for the average person, but it absolutely will preserve your purchasing power. And another thing too that this is ignoring is, since when does like 6 or 7, 8 months of data mean some massive long-term trend? Like gold went completely sideways for 10 years. In fact, I think it might even have been down over a 10-year period. Does that mean that you shouldn't have, like, that would be a much better argument to not buy gold than, oh my God, Bitcoin's down over a period of 7 months. You shouldn't buy it. So some of these I think are realistic points. Other ones I don't think so. I think that the fact that it hasn't gone up definitely is a little bit concerning, but to be fair, we've had hundreds of thousands of coins that have been sold by governments and Mt. Gox, et cetera, and that's not something that's mathematically possible to keep happening. There's not enough Bitcoin in circulation. So you also have to keep in mind that the big run-up in Bitcoin typically is not right after the halving. Typically, it's like 6 months to 18 months after the halving. Right? Back in the last time around, it was 12 to 16 months after the highs came to fruition. So we're not looking until early to later next year to where the traditional highs are going to happen. So anyway, just wanted to give my thoughts on that. If you liked the video, please like, subscribe, comment, all that good stuff, and stay tuned for more.